Hey everybody, thank you for joining us for today's episode of Real Estate Disruptors. Today we've got Noah Brocious with Capital Fund One. Am I saying that correctly?
You got it.
All right, perfect. And he's here to share how his company does 60 loans a month for over 18 million in sales volume. If this is your first time tuning in, I'm Steve Trang, broker owner of Stunning Homes Realty and co-founder of the OfferFast app, the one app you need for wholesaling. And I help people become real estate entrepreneurs. If you're excited for today's show, please give me a wave. Please give me some thumbs up. And before we get started, I did start the show because I want to get back to our community. We struggled before. I know that you started around the same time I did, and it was fun for a little bit, but then it was really not fun for a long time before we were able to get ourselves back on our feet. And so we want to shortcut that struggle for as many young leaders as possible. I don't charge a dime for this show. I don't make any money doing this, so here's all I ask. This is the cost for listening to the show, is if you get value, please tell a friend. Either share this episode now, tag a friend below, or share the best part about the show with them later on. And that way we can all grow together. And don't forget, this is a live show, so if you got any questions, please post your questions and Noah's going to be happy to answer them. You ready?
Yep, let's do it.
All right. So what got you into mortgages?
So in real estate in general, I started in 2004. I graduated college, failed miserably at selling insurance. And then my roommate was in real estate, so started working with him and his dad, who actually is one of the partners in Capital Fund One now.
Okay.
But as far as in lending, we started in 2009. We were buying properties at the trustee sale auction. Did a few of those, lent some money to some people that we met down at the courthouse steps.
Right.
And then decided we wanted to focus more on the lending side. So started with some of our own capital, made a few loans, felt like it had legs, and then started reaching out to friends and family and raising some capital from there.
Very interesting. There are a lot of people that started around that time, and they either morphed into flippers, they morphed into wholesalers, and then you're one of the few I've heard that morphed into hard money loans.
Yeah.
So that's interesting. Okay, and then so what were some of your early struggles in the hard money lending?
I mean, one of the biggest struggles when we started, it was 2009. We're in the midst of the Great Recession. You know, the real estate market was terrible. It was never going to get any better. So just raising capital was very difficult back then. But we stayed persistent and slowly but surely raised more money.
How were you guys able to raise more capital?
It was really just through relationships.
Yeah.
Mike Anderson, who I mentioned earlier, he's just a really, really persistent guy. So he was out just meeting with friends and family and was able to, like I said, slowly but surely get more people to join us.
Did he have a background in lending or?
No, just a real estate background. He'd been in real estate basically his whole career, land development for most of it. So he had a lot of good real estate connections.
Right.
So just kept pounding the pavement and was able to raise some money for us.
Okay. And knowing what you know today, what will you do differently?
What would I do differently? I don't know if there's too many things we would have done differently other than, hindsight's always 20/20, but maybe be a little bit more aggressive knowing that the market's gotten so much better since the bottom in 2009. So probably just raise more money, do more deals, and not be as conservative as we were. But it was, during the time we were lending in, it was just kind of had to be as conservative as possible.
Around what time frame are you talking about?
So 2009, we really started ramping up in 2009, 2010. So, obviously the market was steadily improving, but still there was a lot of uncertainty.
So if you were to be more aggressive, what would you do differently?
I think just, reach as many more people as possible, just kind of be more active on the marketing side, and then raising capital as well, because that was always the balancing act.
So it's really getting out in front of more people and raising more funds, not necessarily being more aggressive on like the interest rates and lending it lower.
Right.
Okay.
Yeah, exactly. Yeah, because that was the beauty of back then. There wasn't much capital available, so it was
Right.
18%, no questions asked. But
Yeah, I remember back when I first got into the industry
mm-hmm.
as a realtor, one of the first things I did was go to the ASRE meetings and the PRAC meetings, and it was 18%. And there was no negotiations.
Yeah.
The question wasn't whether you were paying 18%. The question was how many points you had to pay to get started.
Yeah.
Or
exactly.
down payment.
Right.
Okay. Anything else you would do differently if you were starting over?
Not necessarily. I mean, I think, one of the best ways for most people, including myself, to learn is just kind of through mistakes and trial and error. So, it's kind of good to go through those mistakes and learn. Hopefully they're not too detrimental. Unfortunately, we didn't have anything that completely shut us down, but just learning through experience and mistakes.
Okay. And what sets you apart from your competition?
I think there's a lot of other good lenders in our space, first and foremost. But I think one thing that helps us out is we're really well capitalized.
Yeah.
We always try to keep $5 to $10 million available, so that if somebody calls and says, hey, I got to close a deal tomorrow, we have the funds available. So typically we're not having to scramble for cash. The other thing is kind of our the way we run our business is we do what we say we're going to do. If we say we're going to fund a loan in 2 days, we're going to fund it in 2 days. We're going to figure out how to get it done. So really just following through on what we say we're going to do, and that's helped us build a pretty good reputation. We get a lot of referrals and repeat business because of that.
And you guys are primarily in Scottsdale?
We're based in Scottsdale, but we lend all throughout Arizona. The majority of the loans we do are in Greater Metro Phoenix, but we also lend down in Tucson, Casa Grande, and then up north in Prescott, Flagstaff, and then smaller markets. Show Low, Payson, areas like that as well.
But everything's done in-house.
Yep, we do everything in-house. Which really helps us with our efficiency and get things done quickly from the origination up front all the way through to servicing. We service all of our own loans as well. Yeah,
because I know when I was talking to you before, one of the frustrations I've had was that they're good to go, everything's great, and then I just got to walk the property. And that's just one of the things. Like, well, no, you never discussed this.
Right.
Like we weren't getting a full-blown appraisal. Right. And so we talked about how you do, drive-by only, or can you talk about that?
Yeah, we get as much information as we can up front from the borrower, obviously being mindful of timing and not trying to request too much information so that we can get terms out quickly. But typically all of our loans are contingent upon a drive-by inspection. We just want to make sure the property hasn't burnt down or nothing terrible's happened before we fund the loan.
No one's driven through the house.
Exactly. And I think we've done about 4,000 loans since 2009, and I can remember one situation where we just got out there and something had happened with the property since the borrower had either been there since they'd taken photos, and we had to adjust the loan. But for the most part, it's really just a formality.
So you said you've been doing hard money loans around 2009. Okay, so you weren't around when the whole radical bunny and all of this craziness.
Nope. Yeah, fortunately we started after Mortgages Limited and IMH and all those companies that lost hundreds of millions of dollars. So it was great for us because we obviously got to see what they did right and did wrong, because there was plenty of things that those types of groups did right as well, and learn from what made them successful and then what ultimately led to their failure, and kind of build our business around that.
What do you think were some of the things that they did wrong?
I mean, just being way too aggressive. We were both in real estate back in 2005 and 2006, and you think back and you just kind of thought, well, values are just gonna keep going up.
Party's never gonna
be good. Yeah, and I think unfortunately everybody kind of had that mentality.
Yeah.
And even some of those groups, as things start to get worse, they were doing cash out refis on properties they already had loans on, just giving people more and more money because they were able to get a higher appraisal than they had previously. So
Right.
so really just being overly aggressive.
Yeah.
And having too much pressure to lend money instead of, really looking at the state of the market and deciding if it was prudent to keep making loans or not.
Right. Okay. So I had posted not too long ago this specific question: who is the biggest, baddest hard money lender in Phoenix? And there were multiple people that said Noah. What have you done to earn that, reputation or distinction?
Yeah, I mean, I think kind of like I said, we our motto is just really to do what we say we're going to do. We know that being a lender, we've got to be dependable.
Mm-hmm.
If we're not, we're going to screw up people's deals.
Right.
And once you do that, that's kind of the kiss of death for what we do. So so really just being dependable, being responsive. People, we'll get calls at 6 o'clock at night. Hey, something happened. I got to close this deal tomorrow. We'll burn the midnight oil to try to get a deal done. So
And they're calling your cell?
yeah.
Should we go ahead and publish that right now?
Yeah, let's do it.
Okay, so
what's your cell phone number again, Steve?
it's somewhere. So I did a lot of research on you before you came on the show,
Mm-hmm.
and what's impressive is that I see multiple things involving charity
Mm-hmm.
work.
Yeah.
So you want to talk a little bit about why you do a lot of charity work?
Yeah, absolutely. Yeah, I'm involved with a group called Sons of Arizona.
Mm-hmm.
Some of my buddies started it about 8 years ago now. They just, kind of wanted to figure out a way to give back to the community.
Yeah.
And I got involved about four years ago. I'm actually my term's almost up, but I'm the president of the organization this year.
Mm-hmm.
And yeah, our goal is just to help the youth of Arizona in any way that we can. So we put on a charity golf tournament every year. We had it back in April this year.
Okay.
It was really successful. We were able to donate a little bit over $80,000 to Boys and Girls Club of Greater Scottsdale, and then another great organization called Kitchen on the Street.
Okay.
Everybody knows about Boys and Girls Club,
Mm-hmm.
but Kitchen on the Street, they're trying to help solve the childhood hunger issue. So they provide lunches for kids that are on school meal programs that you don't think about it, but on the weekends those kids don't have food to eat.
Yeah.
So they're able to provide meals to those kids. So yeah, it's a great organization. Really love being part of it and giving back to the community.
Oh, that's really cool. Okay, and so for you, what does a good referral look like?
A good referral is just somebody that's active in the real estate market. That's kind of the beauty of what we do. Even if it's somebody that's got great credit or has a ton of cash and might not typically need a loan.
Mm-hmm.
There's just always situations where anybody that's in real estate that's buying and selling can use our services. So yeah, really just anybody that's active in real estate.
So you have like a menu of products that you guys have.
Mm-hmm.
Can you break down like all the different things you guys lend on?
Yeah. So that's one great thing about us, and another thing that I think makes us a little bit different from a lot of our competition is that we'll lend on all asset types. We'll lend on all types of deals. So our bread and butter and the lion's share of the loans we do still on the fix and flip side.
Mm-hmm.
So we do fix and flip loans where we're just funding acquisition dollars, and the borrowers cover the rehab costs. We also make loans where we cover acquisition and rehab. Obviously lend money to people that are buying rental properties or vacation rentals, like a lot of people are doing with the Airbnb craze that's going on.
Yeah, it's hot right now.
It is, yeah. I've got a lot of friends that have been real successful with it.
Yeah.
So lend money on those types of projects. We make construction loans to either investors or small to mid-sized builders
Mm-hmm.
that are building one-off spec homes, or we've made loans and continue to make loans on small subdivisions here in the valley, and then northern and southern Arizona. We lend on commercial properties, so whether it's a multifamily deal, office, retail, industrial, then we make land loans as well.
Yeah, that was the one that surprised me the most, was that you guys do land loans. So what is your criteria for land loans?
Yeah, for land loans, it's really got to be an infill property. So we're not lending money on speculative land
So I'm
plays.
looking at land in Tolleson, next to Bill Gates' thing.
Yeah, I mean that's that's probably a little too far out for us. So
Okay.
so yeah, as long as it's infill, it's zoned and entitled, we don't like lending on land with entitlement risk, just because it's there's a lot of hurdles you gotta get over with the municipalities and neighbors and all that kind of stuff. So,
Right.
so as long as it's zoned and entitled infill property in Greater Metro Phoenix or one of the other major Tucson,
Yeah.
Flagstaff, Prescott.
Any kind of
we'll
down
look at those
payment
type
requirement
of
for those?
Yeah, on land we typically need 35% down. But like all of our loans, because we're an asset-based lender, the down payment, it really just is determined based on the deal,
Okay.
what somebody's paying, what it's worth. So the better the deal, or the better the deal that the buyer's getting, the more we can lend them.
Okay. And what do you attribute your success to?
I think just, kind of, like I said, doing what we said we're going to do, developing some good, solid systems and procedures. I think that's always important. Staying focused on, really what our model is, not getting distracted by shiny objects. I think that's a lot of times can be a detriment.
Yeah.
Just real estate in general, there's a lot of different things you can do. But I think it's really important to stay focused on, kind of figure out what you're good at and stay focused.
Stay in your lane?
Yeah, exactly.
So there was something that you mentioned to me as well that was impressive. I thought you want to brag a little bit about who the co-owners are.
Yeah.
And why Capital Fund One is, so, I don't know, reputable or trustworthy in what you guys are doing.
Yeah, so we've got a great group of principals of Capital Fund One. Mike Anderson, who started the company back in 2009, he took the risk with his capital to really make this all happen.
Oh, really?
Yeah.
Okay.
So yeah, he's who we definitely attribute a lot, if not all, of our success to.
Yeah.
Him putting it all on the line and believing in the business model. But he's been in real estate most of his career, been in land development, different types of real estate. So he's got a lot of knowledge and background in real estate. Mike Lofton is another one of the principals. He owns a framing company here in town called Lofco. So he's got a ton of construction and real estate experience. He's kind of a serial entrepreneur. So he's been involved in a lot of real estate deals. Buddy Satterfield, who was the president of Shea Homes for about 20 years. He's
super impressive.
Yeah, he's another principal. So yeah, it's great to have his base of knowledge, from land to construction, all those types of things. I mean, he's built thousands of homes here in the Valley, looked at thousands of deals. So to be able to bring in his expertise is great. And then Dean Bloxham, who was one of the founders of iMortgage. He's got a ton of, real estate and mortgage knowledge as well. So between those four, I mean, we've got 150 years of real estate experience and combined. So it's great.
Not just real estate experience, but like really in-depth.
Yeah.
Real estate experience. I feel like I should be coming to you guys' Christmas party because I bet you guys throw one heck of a Christmas party.
Yeah, we have a good time.
Okay, and so what does your organization look like today? So I know we talked about the principals. So I mean, who is involved?
Yeah. So other than those four guys, obviously there's myself, and then Kristen Fenley. She wears a lot of different hats. She handles our servicing. So if you don't make your payments on time, you'll be hearing from Kristen.
Sounds fun.
Yeah, she does our accounting. She oversees closing and processing. So she, like I said, she wears a lot of different hats, and she's been there since the beginning. She and I have really been the two that have been there since the beginning.
Okay.
So it's been fun to grow and learn with her along the way. Tyler Larson heads up our underwriting department, and then Quinn Rikina works with him. He handles underwriting and loan draws as well. Ryan Hardy does our origination, and then Kevin Highmark is another originator. So those are the guys you're going to talk to if you've got a loan request. Then we've got Katie Broyles, who does a great job. She's our marketing coordinator. She does a lot of research for us, manages all of our social media. She does a great job with that. And then Brooke Liniger does our processing. So once a loan's accepted, and she coordinates with title, draws our loan docs, coordinates with title, and coordinates the closing. And then Liz, who joined us recently, she's at the front desk. She helps with payments. She also helps with
so a lot of people wear a lot of hats there.
Yeah, exactly. Yeah, as a small company,
so
over
not
time.
Not that small.
Yeah.
But
we're a little bit bigger than we used to be, but yeah.
And if I wanted to, before we started, you gave me a box full of swagger, and I thought it was really cool.
Yeah.
Who do I need to talk to get that set up, to copy that setup?
Yeah. So Katie. is the one that she and I kind of over time made what we put together a little bit better, and so yeah, it's been fun. We finally got a little bit more organized. We got some shirts and hats, and we got cool little boxes that we're throwing everything in now.
Yeah, it looks really cool.
Yeah.
Okay, so I remember back in 2007, I was thinking, wow, this flipping thing's pretty cool. We were talking about earlier with Azria and everything. It's like, man, 18%? Like, this is crazy. It's ridiculous what these guys charge. I want to do that.
Yeah.
Right? That's where my brain goes. It's not like that's crazy. It is crazy.
Right.
But how do I do that? So what advice would you give to someone, that wanted to become a hard money lender?
Yeah, I think you just there's a lot of different things you got to get dialed in. You got to either be good at or have somebody good at obviously valuing properties, because that's the key. If you're making if you don't know how to value a property and determine a good loan amount, you're kind of
you over leverage yourself.
Yeah, failure in progress. You got to have good detailed systems and procedures, like I mentioned. Obviously, you gotta document the loans correctly. You got to make sure that your collateral is actually secured. You gotta raise capital. So you got to have the money to lend out, or you got to have relationships with investors that are willing to give you that money. You got to keep track of who owes you money and who you owe money to, on the investor side, and then obviously you got to have deal flow as well. So
it's not as sexy as it looks.
It's like any business.
Right.
It takes a lot of hard work and good systems and staying focused.
Right.
So yeah, if you got all that, then you can definitely do what we're doing. It's not rocket science, but you definitely got to be organized about it.
So you're saying, like, if I hit the Powerball tomorrow, I went, let's just say something, okay, 3, 4, 5 million. You're saying that's not enough to just go start a hard money lending company?
You can. The one thing that's great about us and the way we're set up is that we've fortunately been able to grow the portfolio. Now we've got about $150 million out. So we've got good for our investors. We've got a lot of diversity. So we've got $50,000 loans on condos on the west side. We've got multi-million-dollar loans on construction projects or commercial assets. So the one thing with having a smaller portfolio is you have less diversity. So if something goes wrong with one loan, it can have more of a negative effect.
Massive impact.
Yeah, exactly.
Yeah.
So yeah, you you could definitely get started with that. And there's plenty of people in town that are working with that amount of money. But in my mind, there's just maybe a little bit more risk because you got more exposure per deal that you're doing.
And I don't know if you can answer this question publicly.
Okay.
But if someone wanted to do hard money lending but didn't have the resources like you discussed, can they invest with you?
Yeah, they can. We we take money on an as needed basis. So obviously we don't want to raise too much capital because then that dilutes our other investors' returns. But yeah, that's how we're set up. We're still ma and pa on that side where we have just individuals that have invested money with them, and then we pay them a good healthy return on a monthly basis. So yeah, for your example, if you won the Powerball, I would say instead of getting all that set up, give me a call and we can talk about how our investment works.
Okay, good. And going back to my comment earlier about I asked about the biggest, baddest, hard money lender, and you were tagged by multiple people. How do you stay in front of your clients? Because being a lender, right, it's a little bit different than being a realtor. So how do you guys stay in front of your clients?
Yeah, a lot of different ways. I mean, we've got our social media accounts that we use to try to stay in front of people. We do email blasts. We're mindful about not bugging people too much, but you want to find that happy medium. You want to stay in front of people, but not drive them crazy.
Right.
We've got people that are making phone calls on a regular basis to our list of contacts, and then sometimes we just use good old-fashioned snail mail and send out postcards and mailers and things like that. So we try to use as many different avenues as possible.
Well, I think some of the stuff that again, when I was talking to you earlier, was it seems like your golf event did a really good job of attracting your sphere out to the events.
Yeah, absolutely. Yeah, and that's something that we're working on right now. We want to be better about having events, lunch and learns, things like that. So that's something we're actively working on as well. Because you're right. You gotta stay in front of people. I mean, in today's day and age, it's just so easy to get information that you gotta make sure you're the last one that's touched somebody.
Right. Absolutely. So do you have any interesting war stories?
War stories. Yeah. I mean, we've been through. Going back to it might not be as glamorous as it looks or whatever. I mean, there's, we've had some interesting borrowers file bankruptcy and kind of have to battle through that. We've had just people make complaints to different people and having to kind of defend yourself and things that you've done.
You mean like in court?
Yeah, fortunately not necessarily in court, but yeah, just going back and forth with people that when things don't go right, people get unhappy and you gotta make sure that's why we keep good detailed records to make sure we keep track of all of our information. But yeah, for the most part, like I said, we've never had any really really horrible situations. Knock on wood.
So you haven't had any like disastrous, like what were we thinking on this loan? Or
we've had so we had one, and I'll give a little shout out to one of the guys you've had on the show. We had a property out in Maryvale, and it was actually part of one of the challenging bankruptcies we went through, and the guy was ready to sell the property. The insurance had lapsed. The house caught on fire. So we ended up having to foreclose on a fire damaged house in Jameel, and the guys at Keegley were able to sell that property for a number that I was shocked that we were able to that they were able to sell it for. So yeah, we've had from time to time we've definitely had some challenges, but that's one that definitely comes to mind.
Well, I know Jamil loves the firehouses.
He does, yeah. He does. He's good at selling them, that's for sure.
So what is your biggest struggle right now?
Biggest struggle is, just kind of staying ahead of the curve. There's a lot of competition in our marketplace now. When we started back in 2009, there was a few people doing what we're doing, but now there's, I don't even know how many people now. It seems like there's a new group every day that's popping up, either here locally or somebody coming over from California. So really, staying ahead of the curve, knowing, making sure we're getting feedback from our borrowers to know what they need, and then balancing, making loans, staying competitive as far as our interest rates and fees go, but also keeping our investors' money safe,
right,
and keeping the portfolio safe. So really, I would say just balancing, making loans, keeping our clients happy, but then also keeping our investors happy.
So what are some of the things you're doing to stay in front, or to compete against these new guys coming into town?
Yeah, I mean, nothing too specific. I mean, I guess we've gotten a little bit more competitive, as far as our rates and terms. Rates have come down, over the last few years, and then trying to offer people as much leverage as possible.
Yeah.
Everybody, it seems like when we started, the first question was, what's your interest rate? What are your fees? And then it'd kind of get to how much leverage. And now everybody's just interested in leverage, or, everybody wants 100% financing, things like that.
Is that available?
No, we're not doing any 100% financing.
You don't have any, the podcast discount?
No, unfortunately. I wish I could throw it out there, but that'd affect the safety a little too much. So yeah, we obviously, we get our comfort with a little skin in the game from the borrowers.
For sure, that makes sense.
Yeah. So yeah, but we try to give people as much as humanly possible, so that they can do as many deals as possible.
Right. And then, I guess on that topic, I mean, is there like a point where you say, because there's some big flippers in town, do you say like, you know what, we've leveraged too many properties with you, this doesn't make sense? Do you guys have a limit there? Yeah,
we do. I mean, we try to have no more than 10% of our portfolio with any one borrower.
Yeah.
So, but that still allows us to lend, $10 to $15 million to any one person. So,
right.
We really haven't bumped up against that recently. We've got a few people out there that we've got a good chunk of money out there, but we like what they're doing. We like the assets that they're buying or building. So
sure. Okay.
Yeah.
So what is your superpower?
My superpower is I'm very anal retentive, and I've got OCD, so I can walk into any room and immediately figure out what's wrong with it.
Yeah.
So, which is not necessarily a great superpower. My friends used to mess with me in high school. They'd go into my room, and I'd have all my shoes organized, and they'd mess them up and turn my pictures sideways, and I'd walk in and freak out. So,
right.
So that would be my superpower.
Well, I mean, being anal has its benefits.
It does, yeah.
Yeah. So in this field, it's very handy.
Yeah, absolutely.
Yeah.
Yeah.
Okay. And then what lesson would you want to teach today's young real estate entrepreneurs?
I think the most important thing, kind of like we alluded to, is just staying focused. Figure out what in real estate. There's a lot of different things you can do, but kind of determining what you want your focus to be, and then becoming an expert at that, and not getting distracted by shiny objects, because a lot of times people see. Maybe they're investing in stuff in Arizona, and they see a deal in Ohio that looks, just too good to be true. A lot of times taking your focus off of what you're doing.
What's working.
Yeah, what's working, going chasing that shiny object, the opportunity cost of things you might miss out on, and what you're doing here and what you're really good at might not be worth, getting distracted and losing focus. So yeah, just like we said too, just kind of try to stay in your lane as much as possible and become an expert. I'm
gonna have to save that and listen to it again, because I know I've got that problem.
Yeah, I mean, most people do. It's hard. It's hard not to get distracted, and sometimes it's fun to work on new things. But if you got good solid goals in place.
Right.
You got to compare that to what your goals are, and is that going to help get you where you want to be?
Right. And I know, I think one of the biggest challenges being an entrepreneur is that the fund's in the building. The fund's not the finish line. The fund's in the building.
Exactly.
So that's the big challenge.
Right.
So what's the greatest lesson you've learned?
The greatest lesson I've learned, I would say, it's just understanding leverage, not necessarily just with leverage meaning loans on properties, but with relationships, with in deals that you're negotiating, you kind of always got to know, what your leverage is, and try to use that to your benefit.
Yeah.
And also, it relates to buying and selling properties too. I mean, leverage, a good healthy amount of leverage is a good thing. If you get over leveraged, obviously you can get in trouble.
Get burned.
But yeah, just leveraging yourself and your time too, because there's only so many hours in a day.
Right.
You got to figure out how to be able to work with and use other people and their maybe what they're good at that you might not be good at, leveraging those things as well, just to get to where you want to be.
Okay. And what was your favorite, best, or most interesting failure?
Oh man, I've got a lot of them. That's a tough one. I think one thing is unfortunately I don't want to be a Debbie Downer, but trusting people too much and trusting what people say. Sometimes you gotta take everything with a grain of salt with what people tell you, because especially in our industry, because we're not a bank and we don't check credit and don't go through the same process. A lot of times we got fraudsters that are trying to pull one over on us. So
really,
so just kind of making sure you listen to what somebody has to say, but then you kind of do your own due diligence and make sure that you're verifying everything that people are telling you.
I gotta say, I remember one of the episodes of American Greed. I loved that show for the longest time. I don't watch it anymore because cut the cord. But
right.
There was these investors, and they'll they'll borrow on the same property like 4 times. Yeah. So is that something that you've ran into?
We had one guy in particular. He put a little fraudulent release together, recorded it, and then got a loan from us. And then when he stopped paying and we started foreclosure, we got a nice letter from Bank of America saying, "Hey, just so you know, you're not in first position on that property. We are."
Yeah.
And we went back and said, "We got title insured for that." But yeah, fortunately, that's why we get title insurance. That turned out okay. But yeah, there's a couple people right now that I've heard stories of that will probably be going to jail soon because of that same fraud.
Wow, that's crazy.
Yeah.
Is there any book that you've gifted more than any other book?
There's one. Yes, there is. I got to be honest, I'm not a huge reader, but I'm trying to get better about it. But there's a good book that I, read on Audible.
Right.
It's called Procrastinate on Purpose by Rory Vaden.
Okay.
It's all just about leveraging your time and just kind of becoming more efficient. So that's a really good one. He's got a couple good ones. I'm reading another one, Take the Stairs.
Okay.
By him right now, so that's a good one.
Procrastinate on Purpose. See, I did read The Art of Procrastination, and I thought that fit me really, really well.
Yeah. Most people, it's a good title to a book because lots of people like to procrastinate.
So you are in the fortunate position of dealing with a lot of other investors, right? What would you say is a common thread? Why do you think that some of these guys don't make it?
I think for the most part, with anything you do, you got to have 3 things. And this is Mike Anderson, who I mentioned. He's got a lot of old adages, and one of them is you got to have an idea, you got to have capital, and you've got to execute. So, I think what leads to people not being successful is not having all those things. So a lot of people have an idea. Some people might be able to raise some money, but a lot of times people aren't able to execute and really carry through the plan that they have.
Right.
So yeah, just making sure you're keeping your eye on all those things, and for the most part, it comes down to execution.
Yeah. So it's the dreamers.
Yeah.
Right.
Yeah.
They're gonna go do it.
Right.
They don't know how.
Right.
And they just kind of get stuck, and they're on to the next dream.
Yeah. Yeah. The idea is definitely the easy part.
Yeah.
A lot of people can come up with an idea,
Turn
whether
on
it
the
be
TV.
good or bad. Yeah. Yeah. Exactly.
Yeah.
Yeah.
Okay. And then a reverse of that question, all the really successful wholesalers, investors that you work with, what's the common thread that you see between them?
I think just kind of like we've talked about, staying focused, having good systems and procedures, having a model, having goals, and staying focused on those things, and carrying the plans through, and not giving up when the waters get a little choppy or things might get tough, because that's when you grow the most and learn the most is when things do get difficult. So just putting a plan in place and carrying it through.
And, I tell people all the time, I'm looking forward to the next recession. It's gonna be a lot of fun.
I feel the same way.
Yeah.
I like lending in a good, healthy market, but it'll be interesting to see what happens when we see our next correction. It's not if, it's when and how bad. So that'll be interesting. I'm looking forward to it as well.
Is there anything that keeps you up at night?
Everything. I'm a stressor.
Everything.
I stress about everything. If I can't think about something to stress about, I get stressed out because I feel like I should be stressing out about something. So
interesting.
Yeah. So that's just kind of how I'm wired. The market in general. We're obviously in a healthy market right now, but every day we're in a healthy market just means we're one day closer to a recession or to a correction in the marketplace.
Yeah.
So really just being, mindful of being ready for that, and being able to, not necessarily not miss a beat. Obviously, there's going to be issues that you have to work through, but not turning it into a dumpster fire, to be ready for as the market starts to come back.
Right. Okay, so if someone were listening to this right now and they wanted to get a hold of you, whether getting qualified, finding out about loan programs, or anything else, what's the best way for them to get a hold of you?
Yeah, so the best way is to reach out to Ryan Hardy in our office. He's our chief originator. You can either call him at the office. That number's 480-889-6100, or sending him an email at ryan@capitalfund1.com.
Okay. And I think I tried looking him up. I could not find him. Does he not have a Facebook profile?
No, he's an under the radar kind of guy. Yep, he doesn't.
Weird.
Yeah, he's one of the few millennials that does not have.
I was gonna say he's got to be really young.
Yeah, no, he's just not a social media guy. So
okay.
So yeah, no, he's a good guy though. He'll get you taken care of if either you just need some information about our loan programs, if you need a pre-qual letter to submit with one of your offers to get your offer accepted, or if you've got a deal tied up, a contract on a property, he's the one to talk to get you some loan terms or just some information about our loan programs.
Okay, and it's capitalfund1.com.
Correct.
They want to go visit the website.
Yep.
Okay. And again, guys, if you like the show, please share this episode right now. And next week, we do have a special event. I'm going to be speaking on a panel with some other top producing agents to discuss how technology is disrupting our industry, which is great, because we got the Real Estate Disruptors banner. So tune in here. It's going to be at 2:30, not at 2, but you can watch it live. Don't let anybody else know because nobody else knows about it yet. And then don't forget to also check out realestateDisruptors.com, where you can find out about our upcoming events and watch all of our previous episodes. And so with that, thank you, Noah.
Yeah.
It's been a pleasure.
Thanks for having me. Really
Lots of
appreciate it.
valuable information.
Yeah.
Thank you.
Good times.
All right. I'll see you.